Time to check in with Robin Cross of StoneX in Chicago and find out what in the world is going on with that insanely wild lumber market. And Robin, I noted here the last couple of weeks it has been climbing again. And now it seems like it's been testing the highs that we made back on May the 7th. Is that right?
That's right. Yes, indeed, good buddy. First of all, Happy New Year. Before we dive into the details, let's get to some prices. January, which is in its expiration phase, we go off on the 15th, is currently trading at $11.60 even, up 50 cents with only 14 trades today. So for all this action, volume is still very low. March is coming in at $11.78.90. That's up $4.90. But this morning, before we got on the air, we posted a new swing high of $12.14.80, which, like you just said, was our high pretty much at the end of May, beginning of June, when we were coming down from the 1700 high. So on December 22nd, we put in a $9.90 swing low, right? And the normal seasonal tendencies of lumber, and any other market for that matter, they tend to go up during the holiday weeks, right? Because it's thin, and the market's just really run out of sellers. And a lot of, and we talked about this a lot with the tax implications, where guys don't really want to get involved. They were content with what they made or lost at this time of year, and then they just go. So you don't see any new trades. So we're starting to really just get into the meat of that. And so since that 990 low, we've literally been up every day, to our current price today. But I do believe that it's very exaggerated. And if you look at the last 4 to 5 expirations, Marlon, roughly, you see the same pattern develop, right? The front month's expiring. The second month is bid up because, you got the funds and you got whatever different elements that come in here. The real fact of the matter is that it's the low volume and low open interest that's really amplifies these rallies, right? So what happens in the past? The last 4 to 5 expirations, they bid it up. The expiring contract expires, and you have a gap from where the second month is trading to where the front month expired. So guys look around and say, man, okay, I'm long, super high at the market at a big premium to cash. They don't have the wherewithal to see those trades through the next 2.5 months to get to March expiration, right? So what ends up happening is we go down, fill that gap. If the market's worth something, then we'll usually return to our rally. If not, then, this at this time was the best sell of the contract. And I totally suspect that same pattern's going to happen. If you remember what the NAHB told us, several times, at 1,200, you're pushing out like 6 million new potential home buyers out of the market. Why would it be any different, right? Cash, random length print came out yesterday at 1080. So that means the board right now is at least $130 premium. And for the wild, massive swings in lumber, it's a very high level of unpredictability in this market. The one thing that you can almost set your watch to is the fact that we converge versus cash. So no matter how exaggerated in between the markets get, and how disconnected futures get from cash, we always converge. Literally, in 212 expirations, I've only found 2 instances where we failed to converge, and this ain't going to be one of them, right? And so I think you got a lot of different things going on, but why it gets exaggerated, and I just wanted to touch on this a little bit, is, okay, it's put yourself in a trader's position, right? You got to sell some cars, right? You want to do some hedges, you got to sell it. Well, you come in, you see lumber's bid limit up, and there was only 22 trades to get to limit up, and it has a pool of 30 cars. Are you going to, A, sell those trades to get your hedge on, or B, wait a day, see if you get an expanded limit, follow through from the pool, and sell it better? So then it kind of feeds off itself, right? So guys are not selling, they're refraining from doing anything, and then you just wait, and then what happens? That's why you see these sharp rallies and then these sharp breaks, because guys go, oh man, I got to get something done, and as soon as it shows any bit of weakness, they jump all over it, and then that's usually when I get our flush. Yep. So I still suspect the same thing's going to happen. The market's definitely stretched out and overbought, and I think guys should be careful, very careful up here. Absolutely. Especially with all this corona going around. There's a lot of reasons to be cautious, and I think if you don't want to sell the market, you could definitely buy some puts, but if you were a buyer, I would refrain and wait for a better time to buy, and I do believe we're in the middle of winter. You should get that, Marlon.
Excellent information. Well, thanks for pointing that out, Robin, and covered a lot of ground there. I appreciate that. And Happy New Year to you, too. Robin Cross of StoneX with us. We'll pause. I'll get you updated on our prices in livestock next.